how would you like to earn £1 million? It sounds pretty amazing, right? But there's just one problem though. Making money is hard. There is a reason why the average salary across all the different age groups is around about £35,000. And if you compare that £35,000 to the average house price here in the UK, that being £285,000, there is clearly a night and day difference. So in this video, I'm going to provide you with the easiest investing decision that you can make to earn £1 million. This is the perfect strategy for the average person, and you don't really need to know that much about investing yourself either. There is very little risk to buying this particular stock that I'm going to talk about, and I'm going to show you proof that over the years that have gone by, many successful people have used this strategy to grow their wealth as well. And finally, I'm going to be showing you how you can replicate this exact strategy, do this yourself, and reap the rewards from it. Okay, so what exactly am I talking about? The easiest investing strategy that you can use, and you don't really need to know anything about investing, and ultimately, when it's all said and done, it's going to earn you £1 million. Now don't worry, I'm not going to be pitching you any form of sort of forex trading course. I'm not going to be trying to send you through to one of my referral links so you can buy a stock through my link. Instead, I'm going to be providing you with this investing strategy that I use myself on a regular basis, and over the long term hope to make some profits using it. So yeah, with that being said, I do personally use this investing strategy myself, and I actually have a direct debit in which I've set up, which redeposits month on month to this stock that I'm going to talk about. However, I do recommend that you personally do your own research and you put in your own due diligence. And I just want to say right off the bat, I'm not providing you with financial advice. I'm providing you with my opinion and what I do with said opinion month on month and year on year. So there is a problem with people. Have you ever noticed that everybody wants to make money really, really quickly? A quick Google search of how many people play the lottery on a regular basis here in the UK reveals over 70% are playing on a regular basis. And how true this number is, I'm not exactly sure, but everybody knows that lots and lots of people playing the lottery every single week and every single month and every single year trying to hit that big win. However, the odds of actually winning the lottery around about 1 in 45 million. So you've got a better chance of having identical quadruplets, the odds of that being around 1 in every 15 million, or it's actually more likely that you'll get struck by lightning, which happens to every 1 in a million people on average. And if you were to purchase one lottery ticket every single week, of every single month, of every single year, it would take you many, many, many years to actually end up hitting that big jackpot and hitting that big win. And of course, you'll be long since dead when that day finally comes around. You almost certainly will never win that jackpot, and you almost definitely will spend more money buying lottery tickets than you win back in small prizes throughout the years. And I actually think most people unconsciously, whether they want to admit it or whether they don't, kind of know that they're flushing their money down the toilet effectively by playing the lottery. But what I've found is that allure and that rush of potentially getting that big win, that big reward, is actually a really strong feeling, and it actually is able to override basic common sense decision making. Now it's weird, I've actually seen this concept pop up in all different areas all throughout life as well. I actually see it quite a lot in sports betting, where people once again are chasing that big high and that big rush of winning, but they're kind of disregarding the maths around the position or the bet that they've taken, which in most cases has a negative expected value. And I also see it in people investing in stocks as well. Everybody's looking for that next cryptocurrency which is going to skyrocket out to the moon, or that next Tesla-like stock or Amazon-like stock which is going to fly up to the moon at 1,000,000 miles an hour. And quite often with things like this, with like sports betting and investing in stocks and playing the lottery, in life in general, people are looking to take shortcuts to try and get to the end destination as quick as possible. And very often, unfortunately, these shortcuts, at least in my opinion, are based around emotion and gut feeling as opposed to logic and common sense. So the bad news is, unfortunately, get rich quick does not exist. It's a myth that's made up within the human mind, and it's the way in which human psychology works. So the reason that I've included this within this video is to sort of say to you, look, this isn't going to happen overnight. You're not going to be able to make £1 million overnight, contrary to some of the stuff you may have seen online. The only way that would happen is if you were born into a lot of wealth already, or you already have a really successful business behind you. But for the vast majority, pretty much everybody who's watching this video, it's going to be a long game to make that money, and we just need to do the opposite of what most people are doing. Making money requires time, smart money management, and financial literacy. Okay, so now we know how the prevailing human psychology works. It's really weird, but we can actually just look to do pretty much the opposite of that and hope to make £1 million from buying this one stock. So I want you to take a look at this graph right here. This is the GDP for the world, and it shows how the economy has grown from 1960 up until now. Now, you don't need to be a genius to figure out what the theme of this chart is. It's trending in an upward direction decade after decade after decade. So this right here is the world GDP, and if we narrow it down, this right here is the UK GDP, right here is the US GDP, and you can see on screen now we also have the German GDP as well. So quick question, drum roll please, what do all these graphs have in common with each other? Of course, they're all trending in an upward direction. Now, each of these graphs is tracking the gross domestic product, and basically, without getting into too much detail, the GDP tracks the economic performance of the world or the country or whatever it is that it's tracking over a period of time. So to make it as basic as possible, the world was less economically better off in 1960 than it was in 2020. So remember earlier on when I was saying everybody's looking for that next Tesla-like stock or Amazon-like stock which is going to skyrocket to the moon at 1,000,000 miles an hour, or the next big cryptocurrency which is almost going to shoot up in a linear-like fashion? Well, right here we've actually found the perfect example of that. This line pretty much always trends up decade after decade after decade. And even in difficult financial times, most notably in 2008 with the financial crash, and of course in 2020 with the pandemic, over the long term, the GDP continues to rise, even though in the short term when these things were going on, price did crash somewhat. So of course the obvious question then becomes, is it possible to mimic the performance of the world GDP, so the world gross domestic product, just by buying a stock? And the answer to that question is indeed yes. So may I present to you VWRL. As you can see, once again with this stock, VWRL is trending in an upward direction month after month after month. The price started down here in 2013 when the stock was first launched, and nowadays the price is all the way up here. And if we compare the performance of the GDP of the world versus the performance of the VWRL stock, you can see there is an undeniable clear correlation between the two. And I probably should just point out here, GDP and the stock market are not the same thing. However, there quite often is a clear correlation between these two separate things. Generally, with a growing economical climate, corporate profits within companies that are listed on the stock market are rising, and of course that leads to the stock prices rising themselves as well. However, there are other factors such as inflation and interest rates which can influence the stock market independently of GDP growth. But I just wanted to use this example as it's a clear metaphor to explain exactly what I'm trying to get across. Over the long term, pretty much always these two lines do mirror each other, that being the gross domestic product and the price of VWRL, because of the reasons I just touched on. So I can hear you asking to me right now, well, which stock does this VWRL thing invest into? Well, in actuality, it invests into 3,665 stocks. So this VWRL is kind of like the ultimate stock, which is investing in loads and loads and loads of stocks. Now this is what you would actually call a fund. Now this fund isn't just invested in any old stocks and any old companies it feels like having a punt on. It's actually investing in the biggest companies in the world that are listed on the stock market based on their market cap. So you can see 4.2% of your investment in the VWRL will get invested into Microsoft, 3.3% will go into Apple, 2.9% into Nvidia, about 2.2% will go into Amazon, and you get the picture. So the VWRL fund is super diversified and it's investing in a plethora of different sectors all throughout the world, such as technology, financials, healthcare, energy, real estate, and the list goes on and on. And like I sort of touched on, the fund includes companies based on their market cap. So if a company starts to perform poorly from a financial perspective, it will simply be interchanged with another company what's on the up and up. So what you have here is a master stock or fund which is highly diversified, and it's investing into a whole range of different sectors and a whole range of different companies all throughout the world. And it covers 95% of the investable stock market. So you're effectively investing in the entirety of the stock market. So in my opinion, the VWRL fund is an amazing value bet, and it's much better than just putting all your eggs into one basket and buying a company like Tesla or Amazon or whatever the flavour of the month or the flavour of the decade is at that particular point in time. So by purchasing this VWRL fund, for us investors, our bet is that the stock market is going to continue increasing and continue to get richer and richer and richer as the years go by. And effectively, for us investors of VWRL to go completely bust and lose everything on our position, pretty much every company in the world will have to go bankrupt and the price on the stock market hit zero. Now realistically, the only way that I personally could see something like that happening is, for example, if some sort of mass hysteria occurs all throughout the world and people just stop going into work for years and years and years, through nuclear war or through some form of deadly plague which starts wiping out humanity, or in the absolute worst case scenario, of course, apocalypse occurs. So as you can tell, all those doom and gloom type things are all very unlikely to occur, and if they do occur, or one of them occurs, money is going to be the last thing on your mind. It's going to have no value in the world anymore, and with that, obviously you're not going to be bothered about this fund either. So in my opinion, the risks of buying this fund and this stock, or whatever you want to call it, over the long term are very, very minimal, providing you want to hold on to it for many years. Okay, so now we've got that out of the way, I can hear you asking, how much money will I make by investing my money into this fund? And that's what we're going to find out by using this calculator right here. And by the way, if you've never seen this sort of thing illustrated to you before, it might just blow your mind what the results come back with. So let's say we want to invest £500 into the VWRL fund. We input our interest rate, which annually, on average over the long term, tends to be about 10% on the stock market. We set our investment time to 30 years, and of course I'll hit calculate. So you can see our investment of £500 will be worth just shy of £10,000 this time in 30 years, which is unbelievably impressive. I'm sure you'll agree with that. And you can see our initial investment of £500 would yield us just shy of a 2,000% return on investment, which is absolutely mind-blowing if you think about it. So we can take this one step further as well by drip feeding our money and our deposits into the VWRL fund every single month by direct debit. So let's say we're going to do that. I'm going to click on additional deposits right here, and we'll choose to add another £500 to our position every single month. Once again, I'll hit the calculate button, and you can see the results are absolutely staggering. You can see our return 30 years from now would be just over £1.1 million. And that's coming from a cumulative investment of £180,000, which comes from that £500 investment and redeposit every single month. And if we take a look at this represented on the chart view, this is where things look really, really exciting and interesting. The blue line right here represents our investments, whereas the orange line represents the interest that we've earned on those investments. And you can see over the years, the interest that we're earning is exponentially increasing, and we're getting much more money back in profits from our interest than we're putting in from our deposits from our side. This is due to interest earned in previous years earning interest on top of itself, and this is actually something called compounding interest, and it's a super powerful tool that you can use as an investor to really skyrocket your wealth really quickly. It's almost like your pot of money is snowballing and getting bigger and bigger and bigger with every year that's going by. And by the way, let's say you don't have £500 a month to invest into VWRL. We can do the exact same thing using £200 deposits each and every month. So let's just change these around in the calculator to say £200. Once again, I'm going to hit calculate. And as you can see, setting aside £200 every single month will have a really impressive return on investment as well over that 30-year period. So now I'm going to talk to you about how you can invest into the global stock market as a whole by using the VWRL fund. So this is the website that I use to invest into VWRL. It's called Vanguard, and Vanguard is a highly respected, low-feed platform in the world of investing. And it's the broker that I use personally for my investments into this fund, the VWRL. Now I'm going to touch on a few more of the final things that I think are most important to know about before investing your money or potentially investing your money into the VWRL fund, which I haven't already touched on. Okay, so this is the VWRL fund page on the Vanguard platform. First thing is cost and minimums. So you can see here there is a small fee for using the Vanguard platform. This is very small and it's only 0.22% per year. So if you invested £9,600 over the course of a year, which I do personally, Vanguard's cut would be just over £23 because that's around about 0.22% of the stake that you're using. And this right here is basically for Vanguard to do the heavy listing. They'll interchange companies based on their market cap in and out of the fund, depending on how they're performing financially. They'll handle any buy orders that you want going into the market each and every month through direct debit, and they're just going to take a really small, tiny fee for doing all that stuff for you. Next up, you can see we have minimums. Now, if you just want to put in a one-off payment and have no subsequent direct debits each and every month, the minimum you're allowed to do is £500, as you can see there. However, you're allowed to use less if you want to continually use a direct debit each and every month into the Vanguard VWRL fund, which is what I recommend that you definitely do if you're going to do this kind of thing, so you can take advantage of all that compounding interest and that snowball effect, as I was kind of touching on a little bit earlier on. Next up, there are two different variations of the fund. You've got income and accumulation. Income pays out any dividends that you're provided with from the companies you're investing in on the stock market into your Vanguard account, so you can withdraw that cash into your bank account and reap the rewards of the dividends you've been paid. The accumulation version of the fund allows you to reinvest any dividends that you're paid back into your pot and allow for compound interest to take over on any dividends and extra cash that you've made. Now, the accumulation version of the fund is actually named VWRP, whereas the income version of the fund is named VWRL. Now, personally, I would recommend you invest into VWRP. The accumulation version of the fund, as I kind of just touched on, you'll reap the rewards of the compounding interest on extra cash that you're putting into your pot as a result of the dividends that you've been paid. And if I quickly click on the distributions tab, you can see that the dividends paid out on this fund occur quarterly, so 4 times each year, and it's currently yielding at about 1.56%. Total assets is the amount of money being managed within the fund, and as you can see, that's 14 billion. So there's a heck of a lot of people investing into this fund. Also, I want to draw your eyes to this risk box right here, and you can see Vanguard has priced up the risk at 6 out of 7 for investing into this VWRL fund. So what does this mean? You might see the word risk and be a little bit scared by that. Well, effectively, this number is just a measure of the volatility of the stock market. And as everybody knows, the stock market is a very volatile, crazy place. So if you were just to implement this strategy over a very short period of time, maybe a few months, you could very easily lose money on it because of the volatility which I touched on. But that's not what we're looking to do. We're in this for the long haul, we're in this for the long run, and over the long term, you would expect that average of about 10%, maybe a little bit less, it could be a little bit more over the year, on top of the compounding interest, which is what we're looking for to make that £1 million from investing as easily as possible. And basically, our bet by investing into this VWRL fund is that the stock market is just going to get richer and richer and richer as companies continue to gain more and more money. So I'm super interested in earning money, as I'm guessing you are exactly the same while you're watching this video. Money touches every area of life, whether we want to admit it or whether we don't. And over the last few years, I've actually been using a sneaky form of arbitrage to beat lots of UK bookmakers here in the UK and earn thousands and thousands of pounds off them using a sneaky hack. So next up, you should check out the video which I've just linked on screen now. And that will show you a super simple strategy that you can use within this niche of beating bookmakers using basic maths. So definitely check that out if you're interested in making money and growing your wealth completely risk-free. With that being said, thanks very much for watching this video. I really appreciate your time, and I'll see you again in the next video.